Dubai, United Arab Emirates, OPEC, Russia and other oil-producing nations on Sunday finalized an unprecedented production cut of nearly 10 million barrels, or a tenth of global supply, in hopes of boosting crashing prices amid the coronavirus pandemic and a price war, officials said. The cartel and other nations agreed to allow Mexico to cut only 100,000 barrels a month, a sticking point for an accord initially reached Friday after a marathon video conference between 23 nations. They reached the deal just hours before Asian markets reopened Monday as international benchmark Brent crude traded at just over $31 a barrel and American shale producers struggle. Mexico's energy minister said on Twitter that the group of nations agreed to cut 9.7 million barrels a day to begin May 1. Energy officials from other countries shared similar information. Video aired by the Saudi-owned satellite channel Al Arabiya showed the moment that Saudi Energy Minister Prince Abdulaziz bin Salman, a son of King Salman, assented to the deal. "I go with the consent, so I agree," the prince said, chuckling, drawing a round of applause from those on the video conference call. But it had not been smiles and laughs for weeks after OPEC Plus failed in March to reach an agreement on production cuts, sending prices tumbling. Saudi Arabia sharply criticized Russia days earlier over what it described as comments critical of the kingdom, which finds itself trying to appease U.S. President Donald Trump, a longtime OPEC critic. Even U.S. senators had warned Saudi Arabia to find a way to boost prices as American shale firms face far higher production costs. American troops had been deployed to the kingdom for the first time since the September 11, 2001, attacks over concerns of Iranian retaliation amid regional tensions. "They've spent over the last month waging war on American oil producers while we are defending theirs. This is not how friends treat friends," said Senator Kevin Cramer, a Republican from North Dakota, before the OPEC Plus deal. "Frankly, I think their actions have been inexcusable and they are not going to be easily or quickly forgotten. Whether we can even have a strategic partnership will depend largely on their next steps." Iran's oil ministry confirmed the 9.7 million cut for May and June. It said the so-called OPEC Plus countries agree to have Mexico reduce its output by 100,000 barrels only for those 2 months. That had been a sticking point for the accord meant to boost global energy prices. Iranian oil minister Bijan Zongana also told state television that Kuwait, Saudi Arabia and the United Arab Emirates would cut another 2 million barrels of oil a day between them atop the OPEC Plus deal to help rebalance the markets. The three countries did not immediately acknowledge the cut themselves, though Zongana attended the video conference. The Minister of Saudi Arabia said that the Saudi Arabia, Kuwait and the UAE agreed to reduce more 2 million barrels than the agreement voluntarily, Zongana said. "We hope that the market returns to a balanced way." Nigeria's Petroleum Resources Ministry said in a statement that the other cuts would stand in the deal, meaning an 8 million barrel per day cut from July through the end of the year and a 6 million barrel cut for 16 months beginning in 2021. This will enable the rebalancing of the oil markets and the expected rebound of prices by $15 per barrel in the short term, the ministry said in a statement. Mexico had initially blocked the deal, but its president, Andrés Manuel López Obrador, had said Friday that he had agreed with U.S. President Donald Trump that the U.S. will compensate what Mexico cannot add to the proposed cuts. "The big oil deal with OPEC Plus is done. This will save hundreds of thousands of energy jobs in the United States," Trump said in a tweet. "I would like to thank and congratulate President Putin of Russia and King Salman of Saudi Arabia." The Kremlin said President Vladimir Putin held a joint call with Trump and Saudi King Salman to express support of the deal. It also said he spoke separately with Trump, in which they continued to discuss the oil market situation, as well as other issues. Analysts offered cautious praise for the deal. "The pure size of the cut is unprecedented, but then again, so is the impact the coronavirus is having on demand," said Mohammed Ghulam, an energy analyst at Raymond James. Others worried it may not be enough. "This is at least a temporary relief for the energy industry and for the global economy. This industry is too big to be let to fail, and the alliance showed responsibility with this agreement," said Per Magnus Nysveen, the head of analysis at Rystad Energy. Even though the production cuts are smaller than what the market needed and only postpone the stock-building constraints problem, the worst is for now avoided. Associated Press writers Amir Vadat in Tehran, Iran, Matt O'Brien in Providence, Rhode Island, and Jim Heinz in Moscow contributed to this report.